The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the word from USDA on their August WASDE report on Monday, record corn and soybean yields in the U.S., about a bushel per acre higher than pre-report estimates. We're going to go through the numbers. We're going to talk about this and get some thoughts and perspective here today on the show. Joining us for a conversation, John Heimberg with Total Farm Marketing. John, good to talk with you again this week. And man, oh man, if I wanted a Whopper, I would have just went down the street to Burger King and got one. USDA throwing some big numbers at the trade on the August report. Again, record national corn and soybean yields predicted. And we've touched on this throughout the growing season, John. It just sounds like the good areas of the Corn Belt are far outweighing the bad areas, at least according to USDA.
You know, and realistically, this was relatively anticipated in terms of these yields, maybe not to the level that we got today. But at the same time, you look at the range of estimates and, you know, we were thinking as high as in terms of the analyst estimates, 184 in terms of that number today. You know, we look at the crop ratings, you look at the weather, things have been progressively good. And in that regard, plus even this most recent weather that we've got here too, just allowing this crop to just continue to fill. So, you know, we got a pretty big number today at 183.1 for corn and that 53 bushel mark there for beans. You know, wouldn't be shocked if that number still has a little bit more upside room as long as things stay status quo on the weather front. Yeah, I know there's areas that have problems and there's going to be concerns out there. And, you know, you get on the social media world and those areas are talking about what's going on. But I got a lot more people that are sitting back just saying, I've got a monster coming. I've heard that from Missouri to Illinois to Iowa, up into Minnesota, northern Wisconsin, Indiana, and even into Ohio in some regions. You know, so it's going to be a case where the good outweighs the bad. And when you cut acre numbers down, that takes out lower producing potential crops and that increases your yield. So that's part of the formula as well today, at least on that corn side. Now, soybeans totally flip side on that report. I don't know if I want to go into it full length here, but you know, we put the extra acres in as well as raised the yield, and we got a carryout number at 560. I would be fortunate for soybean producers that the corn market rallied today off of those numbers and probably kept soybeans at least steady down 18 to 20 cents. In that regard, I think that could have been a much worse reaction to those numbers today because that came in 100 million bushels over expectations for carryover. And then they also added more to the demand side, which at this stage, I guess, obviously, if cheap prices do occur, we will probably sell more product. But I'm in the camp right now that USDA's got next year's demand a little bit overstated, and that carryout number could very easily be over the 600 million bushel mark.
Well, and to your point there, those acreage numbers, that's an interesting thing we should touch on as well. And there was maybe a little confusion ahead of the report what was going to happen here. But largely, from how I understood it from NASS, was that some of the traditional September data that we get was ready to go here for August. And so that's part of what we saw with some of those adjustments. That's how I understood that. Am I right in saying that, John?
Yeah, very much so. It's right on point. You know, the FSA data comes out, you know, it gets collected as farmers register their acres or certify their acres. That report was also released at noon today. So let's look at a little bit of the correlation. Actually, in the FSA data, corn acreage was 1 million bushels above where the USDA is in terms of planted acres. But that also take into account their lost acres or failed acres, as well as prevent plant about 2.67 million acres. You know, to kind of come up with their numbers. So the USDA actually, you know, them lowering acres in relationship to a stronger FSA report, you know, may leave some room down the road. We'll have to kind of watch how that plays out. Soybean side, you know, kind of in line again with those numbers there, but prevent plant for soybean was only 775,000 acres. Total acres in terms of planted was at 86.046 million. So again, that counts the failed acres in there. So realistically, about 87 million acres of soybeans were planted, a little bit over that, combining those prevent plant acres with those total acres planted. So again, that when you look at the USDA report, acres intended to plant is the question. So you would combine the prevent with, you know, the acres that actually get in the ground. So those numbers were brought in today. And, you know, typically we see that happen in September. So that allowed the USDA to make those acres adjustments today. In that regard. So, realistically, USDA typically never lines up with FSA, and FSA usually runs a little bit higher than the USDA numbers just because of how things work out in the long run. So that was a big factor in adjusting those acreage numbers today.
Well, in terms of the market reaction Monday, it felt like these numbers went maybe a little more to the jugular of soybeans, so to speak, versus corn, and it felt like we got a little bit of spread trading with selling beans, buying corn on Monday after the report. Put some of this into perspective for us, John. And to your point, you mentioned what you're hearing from producers across the Corn Belt, big crops on the way in their backyard. And put some perspective on this. What do we do moving forward from here after this August WASDE report in terms of our row crop marketing?
Yeah, definitely on the soybean side of things, puts a big weight on things and a limiting factor here. First off, we are already struggling with new crop demand. Now we got a stocks to use up to 12.8 on that new crop supply. 560 million bushels is a heavy supply. That's one of the largest we've seen in a handful of years. And again, that number probably has potential to increase if we don't see the demand pick up. So that's going to really put some pressure on the market in that regard. Now, that was a pretty big miss in the soybean market. I do think some of the spreading, that did kick in, probably did support. Plus, also just that typical corn bean ratio when you saw the split action between beans going down, pushing 20 cents plus, corn trying to trend higher. It just became a natural lift and pulled that soybean market up today. So pretty difficult day there. On the corn side, obviously, reaction was, realistic. The report was neutral. I don't want to classify it as friendly. I mean, we're still got a stocks to use. That's, in the 13 window. We got carryout came down 20 million bushels. It's more of a status quo report. And then you go look at the fact they raised export demand by 75 million bushels, cut domestic usage a little bit to get that little bump. So really the acres got outweighed by the new yield and kind of just kept the report status quo in that regard. So now what's it come down to? I think also a big part of the market reaction right now, what's happening with the producer and farmer selling. We've been seeing, we're in that window. September basis contracts probably need to be priced out in the next couple of weeks. We've actually seen the activity in the managed money and the fund flow. Okay, the funds have actually shaved 100,000 contracts off their short position in the last handful of weeks, and prices are net negative. Well, the biggest reason why is producers make sales, the commercials sell the board to match that position. Therefore, the commercial selling is what's been driving prices lower, and the funds have been easily to walk away from their short positions, probably with some pretty good gains. Unfortunately, now they got some ammunition. If they want to hop back into this market and push it down, we're trading, like I said, about 110,000 contracts off our most recent low in terms of net short.
How about the wheat trade, John? As I look at those numbers, it felt like a fairly neutral report for the most part. I noticed on the world side, there was a cut to EU wheat production, which we've been hearing a lot of chatter about that, but then there was some added back to Ukrainian production. So net kind of equaled each other out. That was really the one thing I saw on the wheat side. And you had winter wheats down slightly Monday, spring wheat a little higher. Your take of the wheat trade here after Monday's report?
Yeah, the wheat market didn't get much of a reaction off the report. It was actually trading about double digits down going into the numbers. The report actually was a little bit friendly for wheat, at least in terms of the U.S. side of the numbers. It took about 1 million acres out of the harvested acres. Brought carryout down by about 30 million bushels from last month. The market thought that would actually go up a little bit. So that was some of the reason there. And I think even the corn market still kind of trending higher, kind of helped support wheat a little bit today. So again, the biggest things in the wheat market right now, export inspections today for wheat were really, really good. So that's encouraging to see that maybe some of that demand is getting to our shores because some of those tighter overseas numbers. But we're still in the middle of harvest here for both spring wheat as well as the SRW crop. There's still a lot of bushels coming to the pipeline. So I think it's going to be a very big limiting factor over top this market here in the short term as these combines kind of continue to roll going forward.
And I don't want this to get lost in our talk about the August WASDE as well, but I know Monday morning we did get some fairly decent sales. You talk about demand, quartered soybean sales to unknown on Monday morning's Daily Wire. So that was a good thing to see as well, John.
Yeah, and again, I wish they were bigger. They're nice. We'll take anything we can get right now, especially on the soybean side of the equation. But again, it's product moving. So are we finding a little more demand? Again, I think especially with soybeans with this heavier supply in front of the market's going to go chase it now. We got to get this stuff moving so we can see prices continue to be pressured until we get some more demand in. Again, like I said, those export inspections, corn 975,000 tons, that was a little softer, but we're on pace, maybe in a touch ahead to hit the export target for the year. Soybeans, could like seen a little bit more. I'm a little worried that we still got quite a few bushels that are outstanding that need to be shipped yet. What happens with them? Now we got this price break. Do we see some cancellations? Do we just see them roll into new crop? Obviously, with the world of the way things happen in export prices, some cancellations wouldn't be a shock here, as they just say, well, we'll cancel the purchase from July and replace it with one in September. So we'll have to watch that. But it's good to see at least some printed demand. I think those are pretty commonplace sales today that triggered before the report, kind of as a just in case measure, kind of to meet needs.
We're talking with John Heimberg from Total Farm Marketing here today on Market Talk. Let's go over to livestock trade, John. Cattle, some pressure in feeders in particular, but fat cattle were lower on the board as well on Monday. I know cash cattle was $1.02 lower in the south last week, about $5 lower in the north. Still some worries about demand here, it sounds like. Your take here on this cattle trade as we started off the week?
Yeah, we're kind of in a limbo spot on the charts right now with the fall last week and holding that low and retesting it on Friday and holding that area again. Really, I think this market's going to be driven by two factors. What happens with the retail trade? What happens with the cash market? Now, retail carcasses were down about $5 last week. They were a little bit higher today. That actually helped lift us off some of the morning or session lows. It's going to come down to what the packer wants to put out there for the cash market. Now, capital's still tight. That's still the one thing that's there. If the cash market can hold in here, get steady, get stable again, this futures market's going to be a little undervalued. So we'll have to kind of watch how that plays out. Now, cash starts trending lower and continues to trend lower. I think the futures market will kind of slide with it, even though the basis right now between cash and futures is pretty doggone wide. Especially with the August contract, and it's a couple weeks away from expiration. So that's going to be, in my mind, the two things I'm watching is just what's that daily movement? Do we see carcass values continue to tumble, which will probably lead cash bids down, which will lead the futures market down through these areas. So good spot if you haven't got some defense in, put some safety valves here and let your cattle go to the upside. I've been talking with producers too. I think guys are starting to pull some cattle forward with the fear the cash market is going to come down here. So those are things that are going to come into play in this market. We'll have to watch how this plays out. Now we got cattle on feed next Friday, so I'm expecting those numbers to still stay supportive in terms of the fundamental side of it. But this might be just becoming a market that the market just says, we're tired of the cattle story. We know fundamentals are tight. We've been in it realistically going up since the COVID lows. That maybe the market now just decides to move its energy somewhere else and focus on that, and the cattle market could still suffer technically because of the way we broke down the last couple of weeks.
John, over the hogs, it was mixed in futures on Monday. I know the August contract will expire this week. October's going to take over, pretty big discount there. And two, I know some folks keeping an eye on that meal hog spread, especially after today's moves with the WASDE, things like that. I don't know. What's your assessment of this hog trade overall right now?
You're looking at a market still in a kind of a consolidation pattern, even though it's a series of lower lows and lower highs on that October contract. I agree with you on that gap between August and October, but there is a difference in also the number of hogs coming in that time frame. So we'll have to see how that kind of plays out in that regard. Again, still think the retail side's a big key. Now we saw carcass values; they're still pretty good, but they have softened here. That's kind of trickled into that cash market. I think it's one of those ones we get August off the books, and then we got a chance to kind of maybe sit down and assess where this market needs to be. At least at this time frame, we had a nice run out in October, and since then it's just been kind of grinding sideways, obviously sideways to lower. Maybe it'll find some footing so it can get some traction again, but that might happen after we get this August contract off the books.
How about the dairy trade? Any notes for us here this week, John?
Again, it's range bound. We had a nice little up day because cat's cheese popped up in that regard. Feels like we're at the top of the range here again. We'll have to see how much momentum we can have to the upside, but at least, with the exception of that spike from a couple of weeks ago that got us up to pushing the 2180 window here on that September contract, we basically have been between 2150 and 2050. ping ponging back and forth. And again, kind of with the direction of cash cheese trade. So I think that's still something we're looking at here, but we'll have to watch that cheese trend, especially with football season right around the corner.
Very true. Very true. John, any final thoughts or anything you want to reiterate to folks here as we wrap up today's show?
Just stay active in the markets, and don't be afraid to reach out and ask for questions here. There's a lot of volatility and a lot of things that can come forward. If folks want to reach out and ask you some questions, I know multiple ways to get in touch with you. How can we get a hold of you, John? Excuse me there. Sure. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com. John Heimberg, always good to talk with you. Thanks for being with us here on Market Talk today. We appreciate it. Have a great day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.